और इन स्टॉक परफॉर्मेंस का पोटेंशियल पूरा होने के लिए हम करते हैं सिट टाइट।
पूछिए अपने म्यूचुअल फंड से सिर्फ एक सवाल, क्या उसमें है प्रोसेस का कमाल? Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
कहाँ हो तुम? अंधेरा हो रहा है।
जब बिल छोटा हो जाता है तो दिल बड़ा हो जाता है। हैवेल्स LED, बिजली बचाइए, रोशनी फैलाइए।
ये है ड्यूलक्स वेदरशील्ड पावर फ्लेक्स नेचर चैलेंज।
Welcome back. Let's get chatting about individual mid-cap trading ideas and some recommendations. Ravi Kataria, the Managing Director of Imperatives Associates, joins in now. Ravi, let me straight away get to one of your recommendations, and that's Tamil Nadu Newsprint. It's not just a paper company, it's also into cement. Take us through the reason why you like it.
Sure. See, I mean, we are positive on both these sectors, cement and the paper production space that they are driving through. They have expanded the organic capacity by 50% in paper to 600,000 metric tons per annum. So if we see, they are one of the largest producers from veggies, that's the waste. And they are into the eco-friendly paper manufacturing, which is going to help their brand building over the long term. And I mean, if you'll see their overall, say, efficiency levels, they have improved. We are looking at an earnings per share of around 48 to 50 rupees for this current fiscal. Considering the valuations as compared to their peers internationally as well as domestically, they are trading at least a 35 to 40% kind of a discount to the market valuations. So considering all these factors, we are pretty much positive on the stock, and we recommend a price target of at least around, say, 26 to 27% upside from the current levels.
Ravi, hi, afternoon. So you also bullish on Karur Vysya Bank. Would you run us through the rationale?
Sure. Karur Vysya is an interesting play. The bank is focusing more on MSME space, and it's also targeting more of a retail play. They've expanded their branch count by 5%, and the deposits have also grown by 12%. So this marginal strategic shift towards MSME space would help them garner more, say, margins, as well as improve their adequacy ratios. If we see their current distribution, they are commanding almost like 70% of the business from Karnataka and AP. And we are positive on both these states. Overall, the bank is having presence in 18 states, but a majority of the business comes from the southern states. So the more the bank penetrates into the retail space and the MSME space, they will command higher NIMs. Currently, they are managing more than 3% in the net interest margins. And if we see the valuations wise, I mean, it's trading at a price to book of 1.4x. So that is way lower than the private players, trading at around 2.2x. So the key triggers would be a strategic shift towards MSME space, the expansion into the retail space, and diversification from the two states that they are currently getting the 70% business from towards more, say, outside states would help in garner good commands as well as the valuations.
Ravi, your previous two recommendations, Rushil Decor and RPP Infra, have done pretty well. Rushil Decor is up 130% in the last 1 year, while RPP Infra has also doubled. From these levels, do you still recommend holding on to both the stocks, or is it time to exit?
Sure. See, Rushil is still an organic play. The company is going for an operational capacity expansion into the thick and thin MDF space. They are planning, say, doubling of their capacity in their Chikmagalur facility. It's at the planning stages, so these are expected to, say, realize by the mid of next year. So if you'll consider those, say, numbers into, say, forecasting of the company's revenue, when we combine that with their improving credit quality, they have been upgraded by the rating agencies, their leverage has gone down. Investors seems to like this pick, and they have already achieved our 2 price revision targets that we had recommended since the beginning of 2016. So we'll consider it more of it as a growth stock rather than as in value buy. The RPP it continues to be a value buy in spite of its say appreciation of 25-30% odd in the past quarter or so. We believe that they have a tremendous capability to increase their execution levels from the current levels. Order book wise, they are standing at more than 800 crores book. So if they can target around 400 to 425 crores or execution in a particular, and in the current fiscal year, FY17. So I think we'll be looking at a very high, say, PAT-wise as well as operating margins-wise growth. So these factors should help the stock prices further from the current levels. So RPP, it's certainly a value buy. Crucial can be a growth buy from the current levels. Any decline in the prices of these stocks, we are advising, say, investors to accumulate them.
Ravi, thank you very much for those interesting ideas. Appreciate you joining in and hope to speak with you soon again. We're completely out of time, actually, and so we'll have to wrap this edition of Midcap Radar up. But stay tuned. Your stocks is coming right up on the other side.
Brought to you by Edelweiss Tokyo Life Insurance, Toshiba for the next India, and Dainik Bhaskar.